A mixed session for the major averages today. NASDAQ, the underperformer, lower for a second straight day, though finishing well off of the worst levels. Joining us now is Oppenheimer head of technical analysis, Wald. It's good to see you. Where we go from here? What do the charts tell you about where the NASDAQ, first off, may go?
I think to answer that, they go higher. In regards to recent action, Scott, you have to ask, is it distributive? Is this something we should be concerned about? Or is it more rotational and really just a shakeout in what could be an ongoing advance? And we would side with more rotational and just really a shakeout from a position of strength. So we think the bull's intact. We think a long-term core position in tech is warranted. Well, really the cyclicals now that are picking up the slack. Again, speaking of the rotation. So first with tech, first chart I have is looking at it relative to the S&P 500. And the strength that we've seen in recent weeks coming into this week's peak, that was a 15-month breakout. You got to go back to the summer of 2020 to look at the resistance that it got through. That was a major breakout in trend from our point of view. I think our assumption is that breakout point is now a floor. It acts as support, and expect a higher low to be followed by a higher high. I brought the chart of Apple just to show the largest component within the XLK also turning higher, really from a trend of underperformance. It's been a market performer probably year to date. I think that's an inflection point. And it speaks to the strength in hardware broadly. I heard Christina talk about HP doing well after the bell. We're seeing strength in the likes of TE Connectivity and F5 and Keysight as well. So it's this rotational aspect within tech. While software and semis pause, even you got tech hardware picking up the slack. Well,
all tech is not created equal. We've got to be careful, too, the way we speak about tech in general. The high-flying, high valuation, high growth tech is just not the same as Apple, as you show in your chart.
That's right. Yeah, that's right. So you have these pockets of froth, pockets of strength, pockets of weakness. Even the pockets of froth really aren't showing up at the headline NASDAQ or the XLK. That we've actually made the case that the steadiness at the headline level is underappreciated. If you look at the rate of change of the NASDAQ over a longer period, 3, 4, 5 years, it's really been a straight line for a number of years and well below what we saw in the late 1990s. So the comparisons between now and the late 90s are very stark, how we see it.
Banks are up. Financials up 3% so far this week. This is the other side. This is the opposite of your tech call, which is the high yield plays and rates. Tell us what you see for the bank sector.
That's right. That was our latest portfolio upgrade. We upgraded our S&P target as well as the banking industry on October 2nd in expectation that rates start to move higher here, which has pressured technology, granted, but it's been a boon for the banks, which I think are starting to break out to the upside. If you look at the KBW Bank Index, the strength that we saw off the fourth quarter of last year, we think that was a meaningful breakout in trend that got through resistance levels from years ago. And the more recent consolidation is a pause. It's allowing the moving averages to catch up the price. And I think it does set up for a breakout to the upside. I think rates continue to grind higher. I think there is a ceiling out there just given the abundance of negative yielding debt. And for those reasons, I don't think this is a call to sell technology, even if you do have a little bit. We're at a point where rates move higher. I don't think people give technology credit for that. It's been able to do well even in a rising rate environment. You think back to 2016 to 2018, the 10-year doubled from 1.5% to 3%. Software outperformed.
So just to be clear, you like the pairing of tech and banks in a rising rate kind of environment that we're in, even though they move in opposite directions. They have all week.
We do. I think they work very well together. These are both sectors that we are overweight, that the momentum factor is overweight. They've both been leaders over a prior year, as much as they might be indirectly correlated over a very short-term period. Over a long term, they can work together. Yes, tech is the long-term core position, but we're at a point where cyclicals are tactically attractive here, and banks are moving to the upside. You want to put some beta into your portfolio.
True. To both this year are up at least 40%. Their S&P sectors and for year to date. Wald, thank you for joining us. Good to have you.
Thank you.